what they are saying. Can I start, please?
Yes, sir.
What they are saying, David and Angelo Broo adapted. Fine. The scenario related to one requirement. This scenario is related to one requirement. Is it this scenario related to one requirement? David and Angelo Brooke are married couple. They dispose of the following assets: jointly owned, sold a house for 381,900. This was purchased 86,000. What is the question they is asking? Compute respective total capital gain tax for the year 30. Ignore any payment on accounts. Compute respective total CGT. Respective CGT. Okay. Now, they have jointly owned a house sold for 381. David and Angela occupied the house at their main residence from the date of purchase until March. The house was then unoccupied 1 April and 31st December due to Angela being required by her employer to work elsewhere in the United Kingdom. From 1st January, David and Angela again occupied the house as their main residence. The house was then unoccupied until it was sold. Throughout the period, 1st October to 30th September, they did not have any other residence. So number of days you have to calculate, that's all. On 5th May, David transferred his entire shareholding, unquoted trading company, to Angela. On that day, the shares were valued at 64. David's shareholding has been purchased on 21st June, 48,000. Angela Brooke sold 15,000 shares that has been transferred to her from David. The sale proceeds are 62,400. Neither David nor Angela have ever worked for Bent. On 15th October, Angela disposed of a small business she has been running part-time for many years. The only chargeable asset in the business was warehouse, and this resulted in gain of 37. Angela has taxable income for the tax year 2024, 27,145 for the year tax year. David does not have any taxable income. When they have purchased the house, they have purchased the house on 1st October 2004. Just tell me, please.
No, 1 minute, sir. I'm just reading.
Should I go down?
No. Okay, sir.
In this case, how you will approach first? First, we have to calculate the days. That's very important. Okay, how much do you have?
PRR.
Yeah.
PRR relief.
PRR relief. Okay, PRR. First, you have to now occupation. How many days of occupation? Okay, occupation in terms of days and exempted. Now they say that 1st October, 1st October, 1st October, very clearly, 1st October day with months, okay? 1st October they have purchased, 1st October 2004 till they occupied the house at the main addition from the date of purchase till 31st March. Till 31st March 2008. How many months are there? Total months. Total months. Exempt. Second, next column is exempt. Chargeable months. How many months they have occupied? October to March. 3 and 3. 2004 3, 2008 3 plus 2005, 2006, 2007, 36, 36 plus 6, 42. Are you clear about this?
1 minute, sir. Well, Oh, 42, sir.
October, write down 2004 3 months.
2004, 1st October 2004 to 31st March 2005 is 6 months.
No. In the year 2004 3 months.
Yes, sir.
In the year 2008 3 months.
Okay.
How many months are there? 6 months is over. Next, 2005 full, 2006 full, 2007 full. 3 years full. 12 into 3 how much?
36.
36. 36 plus 40, 36 plus 6. 42. Is it okay?
Yes, sir.
How many months are exempted?
42 months.
0. You have that paper with you? It is there in the paper, just check.
Which one, sir?
Exemptions, I don't know. No, it is not there. It is
Regarding
not.
what, sir?
Huh?
Regarding what, sir?
Regarding number of days. No, it is not there.
The 9 month will be at the last.
Last
9 month is exempt.
Last 9 months.
Last 9 months.
Last 9 months. Okay, automatically it will be exempted. 9 and 9. Are you clear about this?
Yes, sir.
Okay, next. Wait. How much is there? From 1 April, 1st April 2008 till when it is not occupied? 31st December 2011. It is there?
Yes, sir.
Now 211 in the year 2008 9 months. Yes?
Yes, sir.
In the year 2008 9 months. 2009, 2010, 2011, full 12 months. 12, 3 years. 3 years means 36 plus 9. How many?
36 plus 9. 45 is total.
Huh.
In that, she went to work elsewhere, so around 48 is exempted. So fully it is exempted.
Yes, working in UK. 40. Are you clear about this?
Yes, sir.
Next. Required by the elsewhere. From 1st January, for this they will give you marks. Understand my point? 1st January till 31st December, again they have occupied. 31st December 2018, January full year, 12, 13, 14, 15, 16, 17, 18, 7 years.
So we will be taking the year based on not tax year, right?
No,
Okay, sir.
no tax year, occupation, that's all.
Okay, sir.
7
That's
years.
what I got confused.
No, 7 years. 7 means 12 sevens are how much? 84. Are you clear about this?
Yes, sir.
Okay, 84. It comes to how much? 0. Next, slowly. Throughout the period, next, until it was sold 30th September 2024. When they have sold it? Now, when they have sold it on 30th September. Okay, they have sold it on 30th till 30th September. 30th September 2024. Now, 2024 means 2018 from 1st January 2019 till leave last 13 months means 2024 leave it. 31st December 2023. Are you clear about this? This is unoccupied.
Yes, sir.
How much is that? How many months? 2019, 20, 21, 22, 23. 5 years. 5 years. 5 years means 60 months.
Yes, sir.
It is chargeable or exempted?
Up to 36 for any reason is exempted. And the remaining will be charged.
No.
24.
How much check?
Because the rule was there up to 36 months for any reason will be exempted. No, sir.
Any reason will be exempted. Is there any reason will be exempted? Any reason will be exempted. We have used anywhere in the previous cases, check.
We didn't use.
For any reason it is exempted. Check again now quickly.
Up to 36 months, 3 years for any reason absence is exempted.
No.
It has to be occupied 36 months and then occupied.
No. Yes, we have taken 36 months working in UK. Working, first one is occupied. Keep it in mind. This is one. This is occupied. This is working in UK. Is it right? And
that is this thing. Up to 48 months, 4 years of absence.
Okay.
Working elsewhere, UK is exempted.
Up to 4 years. Okay, this is up to how many years? Make it a point. This is up to 4 years. This is occupied. Next. $60. Unoccupied. What is the rule? They say again, please tell.
Up to 36 months, 3 years for any reason of absence is exempted.
Which chapter it is?
Chapter 20.
One second. Page number?
I don't know the page numbers.
Okay. 1 minute. Chapter 20.
Should be there right after the period of occupation.
The last 3 months of the ownership is always up to 3 years of absence for any reason. Any period spent living overseas due to employment. Up to 4 years of absence as a result of working elsewhere. See, it is on page number 672. Okay, period of deemed occupation. The last 9 months is there. Up to 3 years absence for any reason. Up to 4 years as a result of, see, up to 4 years, the first one is fine. The second one is working in UK, fine. The third one is occupied, fine. What is the condition? They say up to the period of, up to the 3 years of absence, any reason is fine. After that, again they are coming and occupying.
No, they didn't.
If they are not coming and occupying again, can we give it that they are 36 months?
No, sir.
Means how many are exempt? What is the condition?
Only 9 months will be exempted. The remaining will be chargeable.
Remaining will be chargeable. Are you understanding what is happening? That condition will work when you are going to come back and again you are going to occupy the things. If it is, we are not going to occupy it, then that 36 months will not be applicable. Are you clear about this?
Yes, sir. But in total months, how is the 9 months included in that, sir? That 9 months should be included from the 60, right?
No, 9 months, anyway, last 9 months is exempted. By default. First you have to remove 9 months. First you have to...
Isn't it from the 9 will be exempted and the remaining will be chargeable?
Pardon?
From the 60.
No.
From the 6.
No.
The 9 will be exempted and the remaining is chargeable.
Yes. Last 9 months you will get at any, by default you will get that.
Yeah, but why is it there in total months? In that case, it will be 69, no?
Yes, 69 minus 9 na. 69 minus 9.
Okay, you have taken, okay. You have taken up to 31st December 23, that's why.
Here it is there now, here I have written now. See, here I have written 30th September 2024.
I get it.
Are you clear about this?
Yes, sir.
See, they will test you very, very clearly, slowly. They will test you the things as needed, okay? They will test you the things as needed. Fine. Now, how many months are there? Are you understanding? Last 6 months. If you are coming and occupying, then it will be exempted. If you are not coming back and occupying, it will be chargeable. Okay.
Yes, sir.
Total months are how much?
240, 180 is exempted.
240, 180, and
60.
60. What is the PRR relief?
We need to calculate that, sir.
Huh?
Sales proceed might be cost. We need to calculate that.
We didn't calculate
Sales
it?
proceed.
Okay. 1 minute, okay? 1 minute. 1 second, okay? Now, put one dash here. First we will do the workings, okay? First we will do the working. This is 1, working 1. Next, what is the working 2? How much they have sold?
Letting. No. Sale proceed is 381.
1 second. We will do the working 2. Okay, working 2. Working 2. Is it? Working 2. Is it with respect to the house? Okay, with respect to the house. How much is the disposable proceeds? Disposable proceeds are how much? Disposable proceeds are 381. What is the cost?
Cost is 86,000.
Cost is 86,000. Okay, cost is how much is there?
295,900.
295,900. Now, PRR, how much? You can do here only. Okay, you can do here only. You don't need anywhere else. How much? 295. 295, 900 multiply by exempted how much? 180. Total is how much? 240. It comes to
221,925.
221.
925.
221,925. It comes to how much?
73,975.
Chargeable gain. 73,975. Okay. Next. What you have to do next one? This is over. Almost this is done. Yes?
Yes, sir.
Okay. Next. One second. About next, what is the shares of that? On 5th May, David transferred his entire shareholding 20,000 shares. unquoted company, or to Angela. On that day, the shares were valued at 64. Shareholding has purchased on 48. What we have to do?
Uh,
Slowly.
20,000 it is there. So 48,000 is the cost. I mean, it is sold at 64,000. And the cost will be deducted. But at the time it was shared was we have to take the initial cost, not the value of that day.
David transferred his entire holding of unquoted to the spouse. On that date, the shares were valued at 64. Shareholding purchased 48,000. Think. It is the transaction between whom?
So it does not, there is no chargeable gain or anything.
Haan.
It has been transferred and
It is.
value
Haan.
on the day it is being purchased.
It is any chargeable gains are there?
No.
No. It is between whom? Between spouse. Between spouse. We will write this, okay? Between spouse. She has sold, is it right? No. Write down there. Write down there. Working 3. Okay, working 3. Transfer of shares. Transfer of shares between whom? David to Angela. David to Angela. Angela. It is between spouse. Is it right?
Yes, sir.
No gain, no loss. Is it okay with this?
Yes, sir.
Next. Okay? Next. Working 4. David, what is there? Angela sold. Now she has sold the shares. She has sold the shares for how much? She has sold the shares for 62,400. How much? So that sold 15,000 of the shares, not all. 15,000 of the shares she has sold. How much for 62,000? What is the cost of total 20,000 shares? The cost of 20,000 shares is how much? 48,000. Okay, we have to take only the one. Okay, only the one. Now, working 4. Angela sold the shares. Sold 15,000 out of 20,000 shares. Out of 20,000 shares. When they have sold? On 7th July 2024. What is the proceeds? How much is the sale proceeds? Sales proceeds are 62,400. What is the cost? How much is the cost? 20,000 equal to how much? 20,000 is equal to how much? 48,000. Okay, 20,000 is equal to 48,000. 15,000 is equal to question mark. Are you clear about this?
There's a formula, right?
What is the formula?
cost into A divided by A plus B.
The same thing, no? Cost. How much is the cost? Do it. Cost. Total cost is, yes, total, the same thing will come. Just tell me, yes, we have, there is a formula is there. Formula is there. Cost into A. Cost is how much? Cost is cost times A by A plus B. Is it the same thing?
Yes, sir.
Same thing. How much is the cost? Cost is 48,000 times 15,000 times 20,000.
$36,000.
36,000. Difference?
$26,400.
Is it okay?
Yes, sir.
Next.
So I need some time, sir.
No problem.
Yes, sir.
Okay, next. Now, what is the, slowly, we have done this. This is over. Neither David nor Angela has ever worked for Bent. On October 15, Angela disposed of a small business which has been running part-time for many years. The only chargeable asset in the business was a warehouse, and this resulted a gain of how much? This resulted a gain of 3,700. Angela has a taxable income of how much? 27,145 for the tax year. They don't have any other income. Next, what you have to do? Very interesting. Working 5. How much is the taxable income she is having? What we have to do? Read, understand.
So is it the chargeable business qualified asset divided by chargeable asset?
Yes. Business
Asset. CBA market value of that. No, that one. The 3700 is taken directly, right?
Hmm.
And then you have to, at the end, you have to compute for CGT.
Think. How much is that? They gave taxable income 27,145.
Yeah, that you have to minus from the PA. No, the basic limit, 37,700.
Good.
That will be the basic.
Good.
And the remaining will be at the higher rate.
How much is the
No,
basic?
Sir, there is AEA and everything.
What is that?
AEA, annual exemption amount.
That is very far. Before that only we have to think. 37,700. It is the basic rate.
Yes, sir. That will be under the taxable amount only. No, in order to get taxable amount, you have to deduct AEA also, right?
This is
Then
the
only you get the
taxable income. This is the taxable income. This is
So taxable income. This is for the that basic rate and this thing. In order to find basic rate, working as the taxable income. Taxable income is 27,145.
Okay.
So minus 37,700.
Good.
1055 under basic.
Yes.
And the remaining that will come under the corporation tax payable. CGT payable. The remaining will be at higher rate.
And what will do with respect to 3,700?
So you will add all the chargeable gains which is been arise from the first one, second one, and the third one. And then you will minus the AEA.
Okay.
And then you will get the taxable amount.
Now, taxable income is how much? Taxable income is how much? 27,145. It is there.
Yes, sir.
Basic rate is how much?
37,700.
37,700. Just keep it like that. How much is the leftover here? Available, still available. How much is there?
10,555.
10,555. Okay, we will use this if it is needed. Okay, we will use somewhere. Where we are using, when we are going to work it out, we will come across that. Okay, now.
Capital gain liability we need to.
Okay, we will use that at some point of time. Just wait for a while. Okay, just wait for a while. Now we will do it separately. What is the debit? What is the debit capital gain tax liability? Debit capital gain tax liability. Separately we will do for the year 24-25. For the year 24, this is the main frame of the solution. Those are all workings. This is the main frame. How much is that? How much did they got it for the house? What is the capital gain tax for the house? Chargeable gains.
36,988
How?
for each.
Ah,
50-50.
good. Is that house? Okay? House. Total is how much? Total is 73,975. 73,975 divided by 2. It comes to how much?
36,988.
36,988. Anything else? Anything else? Working 3? No. Transfer of shares? No. Even it is not there, you have to write transfer of shares. Transfer of shares is 0. Okay? Transfer of shares is 0. How much is there? 36,988. Okay, 36,988. Total chargeable gains are how much? This is the total chargeable gains. Now, after that, what we have to do?
So why don't we take transfer of shares?
Huh?
We take transfer of shares for
David we will
Angelo.
not take. For Angela we will take.
Okay, sir.
David will not take because David transferred to Angela. Why he will be get taxed on that? There is nothing in between spouse.
No, sir. Yes, sir.
Okay. Next. How much annual exemption amount?
6,000.
Why?
Sorry. It is 3,000, I think.
No thinking. No thinking.
No, I was in IHT, it is 6,000.
Dear, little bit. Okay. Little bit.
Yes, sir.
Little bit. Very focused. Very focused. How much is there? 33,988. Taxable gain. Now, what is the rate? Residential property, something is there now?
Residential property is under 24%.
Check.
18% and 24%, sir.
18% and 25. They are on the lower rate or higher rate?
33,980. So, at the lower rate, 18%.
CGT at lower rate. 33,988 times 18%. How much will get?
$6,118.
6,118. Are you clear about this?
Yes, sir.
They gave you 10 marks. This is for 5 marks. Not 5 marks, at least for 4 marks.
Yes, sir.
Next. Here you have something more. Here it is not so easy. The problem is with Angela, okay? The problem is with Angela. 1 second. I want space. We have used the space, no problem. Okay, fine. With respect to the Angela Brooke. Is it capital gain CGT liability? I am writing like this, you don't write. Again, I will tell every time, I will tell like this. 2425.
What we have to write then, sir?
In full. In full.
Corporation.
Corporation. Yes, capital gain tax. You have to write in full. She is having so many things. Fine. Residential property is there. Business is there. Is it right? Business is there. She has the shares are the three things are there. What is that business? There is something word is there now.
EADR.
What does that mean?
Business asset disposal relief.
Business asset disposal relief.
Up to 1 million, it is 10%.
BADR. Is it right? You have the shares. You have the residential property. See, this is the what? Is it right? At the end, there are so many things are there, okay? Now, how much is the BAD, one by one? How much is the house? House is how much? 36988. Shares are how much? Shares are how much? We have calculated. House is working 2. Okay, write down. Nothing will happen. Okay, nothing will happen. 73975 divided by 2. Shares working which one? Working 4. Working 4. How much is there? 26,400.
So BADR, the order has to be important. BADR has to come first or anything like that.
Nothing. Nothing.
So there will be one more column in total, right?
I have not put the total. Okay,
No, at the end there is one.
Okay, put the total. Put the total. Nothing will happen. Warehouse.
Because AEA has to be calculated in total, right? That's why.
Yeah, there is a order. AEA should be divided. Should be deducted first from where?
Non-qualified.
Which one is non-qualified?
Residential property and shares.
Residential property first, then shares second. Good. Okay, that's good. Automatically, my students know more than me. By the time it will reach, it is fact. I am telling you what is my strength, what are my weaknesses. Okay, because you people now you people are more focused rather than me. Okay, this is total chargeable gains.
Actually, this one we have to do like this, sir. We have to do in the format where it is qualifying and not qualifying.
Okay, next time we'll do like that.
Yes, sir.
Okay, no. Total chargeable. Next, less AEA. How much is AEA? First, we have to deduct it from the residential property. 3,700, 26,400, 33,988. This is the taxable gain. We have done rightly, not we have done rightly, because why we have done rightly? No, we have done correctly only, because this is going to be. See, I'm just writing. I will just for our understanding. Don't write. This is for 10%. This is for 10%. This is for 20%. Now you will write gains qualifying, gains not qualifying. You will put like this. Thirty-three 988 is there. 3,700, 26,400. Is there? There are so many complications are there here.
Basic amount.
Okay.
Which one will you take? From unused basic will be taken from which one, sir? Main residence or shares?
What you are asked? What again? Please tell.
The unused basic amount. Which one will you take?
Yes. How much is there? How much is there? 1 second. How much is unused is there? Unused is how much? Unused, where we have written 10,555. Can we use that?
Yes, sir, we can.
How? How? How we can use it? How we can use that? Six, 8, 10,000. Okay. Yes. 1 second. One second. I'm writing on the right hand side. I'm writing on the right hand side for our understanding. $37,700. Okay. How much is the income, taxable income? 27,145. If you take into consideration how much we got it, 10,555. 10,555. 10,555. 3,700. 3,700. Just I'm telling 1 minute here. 3,700. It comes to how much? It comes to how much? 6,855. Good. Now, up to 37,700, what is that basic rate? Is it right?
Yes, sir.
Up to 37,700 is the basic rate. Means this will be at what rate? This will be at the rate of 10%.
That is fixed 10% also.
Yes. Okay. And this will be at the rate of how much? This will be also at the rate of how much? 10%. Okay.
So that can be claimed 26,400.
That can be claimed from 26,400. Next, wait, slowly wait. Next, how much is the balance is there? 26,400 minus 6,855. 26,400. Very interesting. Okay. Okay.
8,545, 20%.
How much?
19,545 is
19,545 will be at the rate of how much? 20%. Okay, and just our understanding. Okay, it will help us in the things. Next, automatically they are going on a higher rate. Okay, they are going on a higher rate. How much is there? 33,988. 33,988 will be at what rate? Residential property higher rate is how much? Huh?
24.
24%. Are you clear about this?
Yes, sir.
Very sensitive. Okay, very sensitive. Fine. Now, see, write down this dear. First, write down somewhere here. I'm not going to repeat again. First, write down this somewhere as a supporting one. It will help us in calculating the tax liability. Is it? This is, I will put it a star here, okay? I'll put it a star here. It will make Are you clear about this?
Yes, sir.
Okay. Next, coming to that, okay, coming to the things. How much is it? Now you understand how you have to calculate the tax, okay? How you have to calculate that. Now, gains, see, here we have to calculate capital gain tax liability. Okay, CGT liability, CGT liability. Is it? Now you write down gains qualifying for BADR 3,700 times 10%. It comes to how much? 370. Are you clear about this?
Yes, sir.
Why we are calculating 10%? Okay, you have to refer to this one. Next.
BADR, this thing rule itself is 10% only.
Yes. Oh, fine. If it is rule itself 10%, in spite of that, we have to mention. Next. What is the shares gain? Shares gain. We have to bifurcate. Okay, you have to bifurcate. How much you have to bifurcate? We have done this. 6855. 6855 at the rate of how much? At the rate of 10%. It comes to how much? 686. 685 or 686. That is not a big issue as such. Okay, next. The balance is how much? 19,545 times 20%. How much you'll get?
So 3909.
3909. See, I have put 26,400 like this. It makes sense. Okay, it makes sense, and it gives you, this is what presentation talks about. Is that presentation? See, automatically the perception, the view of the examiner will change. They will say that yes, they know the things. Next, how much is the residential property? Residential property at the higher rate. How much is it? 33988 times 24%. It comes to how much?
Uh, 8157.
8157. Total comes to how much?
13122.
13122. This is called as capital gain liability. Are you clear about this?